Thank you, and good afternoon, folks. Welcome. Pradeep and I have decided to have a completely unscripted discussion, and the only thing we've agreed on is my opening question. So, Pradeep, welcome. Great to have you here. My opening question, and really I want to have an open, free-flowing discussion on this. Why do you think collaboration is so difficult in the payment environment in South Africa?
I suppose, in thinking about that, clearly this morning I didn't realize it, but a lot of people came to me and told me I've stirred the pot, and was very direct and frank about some of the things. And so let me continue with that, because I don't know any other way, right? Why is collaboration so difficult? I think there's too many vested interests. There's too many vested interests. And I think somebody this morning, I don't know who it was talking about the fact that if you keep looking down at your feet, you don't realize that the world has changed above you. So too many vested interests, and we lost sight of the fact that actually, in the end, payments, networks, the platform, the system, serves South Africa Inc.
Yeah, I mean, if I reflect on other industries, I do a lot of work in telecoms, the internet industry, the Unix, the world of Linux and software and open source app stores. You get a lot of collaboration, and the reality is in those industries, the incumbents are playing to win. But in South Africa, the incumbents are playing not to lose. So the challenge that you have in South Africa, which makes it very difficult, is you've got a few large banks who really hold the bulk of the transactions and the revenue streams, and you've got thousands of fintechs. And the fintechs are playing to win, the banks are playing not to lose, and it feels like that's the tension that we have to deal with here. And somebody needs to call this out. It's the 800-kilogram gorilla in the room, right? And my mom always said, if there is an 800-kilogram gorilla in the room, it's only polite to introduce him at some point, which is what I wanted to do.
That's the solve, right? And that's me. I think it is a fascinating feature of the South African landscape. We talk about private-public partnerships, we talk about collaboration, and then we all go and bury ourselves in our own holes and carry on with life until there's a crisis. And we keep waiting for a crisis before we then come together to solve together. And lots of times the writing is on the wall that the crisis is coming. We still refuse to attend to it. You take Vision 2025. Vision 2025 didn't get written and published in 2018. Its predecessor, Vision 2020, prior to that, Vision 2010, prior to that, the Blue Book, for those of us that were around that time, has been consistent about the things that needed to be addressed in the payments ecosystem. And so 10 or 20 years later, we can't say we didn't have adequate notice of what we needed to do to work together to make this happen. And of course, I think it's Einstein that said, if you keep doing the same thing, don't expect a different outcome, right? It's the definition of what?
Yeah, and it follows what happened in Brazil and what happened in India. In both cases, the central bank, Reserve Bank, basically said, look, I've sat back, I've waited, I've been patient, it hasn't happened, I'm stepping forward, and I'm going to drive out standardization. And the challenge is, if you look at most industries in the world, there's this wave. In fact, in the semiconductor industry, they call it Makimoto's law. And this pendulum switches. If you go every 15 years, it goes from customization, which is fragmentation, and then it swings to standardization, then it goes back to fragmentation, then it goes, or customization. It swings backwards and forwards. And in fact, if the industry got together, they could in fact create a level, they could create both and rather than either or. So you've got this wave swinging backwards and forwards. Now, this seems to have worked well. I mean, what lessons are you taking from Brazil and China and India in particular? Because I think you've adopted that kind of approach, and it seems to be spectacularly successful in those two countries.
Yeah. I, I think there's a few things that we've learned from those lessons. Be decisive, challenge the norms, but act with intent. And if you put the end customer at the heart of your decision making, you'll always make the right decision. Because then you'll cut through all of the vested interests. You'll hear everyone talk about their interest in different ways. They bring about those conversations in different ways. But ultimately, it's about protecting their turf. And it's about or giving up as little of the turf as possible. And if you look at through all of that and you put the end consumer, the person who's transacting in this economy in cash, that you want to bring into the digital world because you know that will drive social development positively, then the way you look at this is very different. And then there's no winners and losers. There's no either or, as you rightly point out. It's about how do we work together. It's my earlier analogy today, It's no use building the N3 only. You have to connect it to the R24, to R21. You have to upgrade London Road and all the way up Grayston. And then make sure you put the right vehicles on the road. Otherwise, you're still not going to get to your end destination.
Yeah, so I mean, if I go back in time and I look at video recorders, we used to have VHS, and very few people remember this, but we used to have Betamax.
Betamax.
Remember Betamax, right? And Betamax died because the VHS ecosystem just eventually got bigger. You look at the telco industry, we used to have CDMA and TDMA, and eventually one became bigger and the whole world moved. And what happened? The pie became bigger for everyone.
Absolutely.
And the challenge we have, I think, is we've got a lot of walled gardens. We've got a lot of walled gardens. I mean, I posted today, we've got 30 different instant payment systems running in Africa. 30 different ones. So everyone's got their little pond. And I guess your challenge is how do you coalesce all these ponds into an ocean? And in fact, the fish in the ocean is going to be more than the fish in all these ponds combined. How do we convince people that that's true?
I spent the last 2 years talking about that, trying to convince people. I'm hoping that there's a reasonable mass of people who understand the vision and get it, that it creates sufficient momentum to then start delivering. Ultimately, you can only talk for so long. You've got to start doing some real things that demonstrate that this world is changing. It's changing fast, and we're staying true to our word of what it is we wanted to do. Clearly, we're going to deliver and implement, but learn fast, fail fast, fix, adapt. This notion that we can get everything right up front and plan it perfectly. Well, the reality is by the time we finish that, it's obsolete. And there's nothing to implement. So I think that's going to be the challenge. And it does require, I think for collaboration to work, for public-private partnerships to work, it must be very clear about the roles and responsibilities, who does what in this space, and you fix the right issues. Otherwise, you end up with the wrong answers.
How are we going to handle the risk issue here? Because the biggest challenge in collaboration is normally, we can collaborate, but it's asymmetrical. I'm a big bank, so if somebody's going to sue someone because somebody goes wrong, they're not going to sue the small startup. They're going to sue me because I've got the balance sheet. So I'm actually carrying the risk. No matter what we contract for, I'm going to carry the risk. They're going to choose to sue me. How do we deal with this asymmetrical risks problem that we're going to end up with as we collaborate and move forward?
I suppose for me the big issue is about you must have a standard set of rules that apply to everyone, irrespective of whether you're big or small. So it's a standard set of rules, and payments are fairly simple. Standard set of rules that apply to everyone that want to provide a service in that space. And then drive a utility function that runs the middle mile. So let the entrepreneurs fight it out on how do you price for services? How do you differentiate for services?
I can see the logic in that. I mean, if I go back in time and I think about the two big Ministry of Finance initiatives, one was the National Credit Act, and the other was the Mzansi account.
Mzansi account.
And if I look at those two, The National Credit Act, I mean, people don't get this, but South Africa dodged an enormous bomb in 2008 thanks to that National Credit Act, which came out 20 years ago. And everybody grudgingly did it, and it ended up really helping the country. You look at the Mzansi account, there the Reserve Bank, I mean, the Ministry of Finance was actually quite specific about telling us what to do. We all did it, and it actually flopped.
Yes.
Now, how do we kind of walk this line between these two? How do we make sure that we are intervening enough to create this common ground, but not so much that we actually run this risk that we ran with the Mzansi account?
Yeah. I suppose as policymakers, the first real challenge we have as policymakers is we tend to write policy from our own frame of reference. So if you haven't lived in a township, you haven't had a granny who brought you up, who understood how to balance the budget to make 100 rands go very long. You end up solving for problems that the real world people don't experience, or the bulk of the people don't experience. But the intervention has to be then very clear. If you're stepping out of your space, then be very clear for what reason, for what purpose, and what problem you're trying to solve. And make sure it is quick and you get out, so you stay in your lane. As a Reserve Bank, it's not our job to interfere with government. We don't profess to do that. In the same way, we don't profess to know how to serve a client. We don't have clients. We're a policy and regulatory institution. So don't try to figure out how to do the end mile. Make sure that the middle mile and the framework that sets the rules for the game is clear and objective.
I actually mapped the adoption of PIPC in Brazil and the adoption of UPI in India. And in a sense, they were lucky. They were lucky that COVID happened. If it wasn't for COVID, because there's this enormous uptick during COVID. Now, we are not going to have the benefit, in inverted commas, of COVID. How are we, have you started thinking about how do we deal with that? Because it made it compelling, right? People don't change because something is important. They don't change because something is possible. They change because something is urgent, mandatory, or convenient. And actually, COVID did that.
Yeah.
And many, like contactless took off, online banking took off, contactless payments took off. Globally, we were all very comfortable with doing digital thanks to COVID. Without COVID, how do we create this mandatory kind of adoption process that we've seen?
This week I met someone from Egypt. Egypt has a fascinating story to tell in payments. We tend not to study African examples of where they've got it spectacularly right. And they said to me, in 2020 there was zero. And they took over and they started to build the system. And today, in the last year, they did 3 trillion of transactions on that system. Wow. That's post-COVID.
What's the name of the system? I don't think
that's run by the Egyptian Central Bank. They've digitized payments. They've brought payment rails. They started off with, between themselves and the Minister of Finance, owning 54% of a privately owned utility that they then bought out, 54% between Treasury and the Ministry of Finance and Central Bank of Egypt. And in 2022, 2023, the Central Bank of Egypt said, no, we're taking a 54% stake. So they doubled their stake in this, together with 2 or 3 other commercial banks that were originally part of this utility. And they had none. They had none of these payments.
And how long did it take to get that done?
4 years.
4 years. Okay.
From 0 to 3 trillion.
So we should actually make a note of that as a case study.
A case study.
Yeah.
And again, it's a central bank that stood up and said, well, it's not happening in the way we wanted it to happen. We're going to do it.
And did they make payments free, like they did in India, for example?
It's fascinating, right? They said as part of uptake in the first 3 years, up until now, it's still up to now, and they're going to look into it. They said that for everyone, participants and end user, it's free, we'll subsidize it.
Okay.
Not a sustainable model for the long term, but a model to allow for adoption to take place at pace. So,
Yep.
so it is free. It's free to participants. So it's a free rail that they run, fully subsidized with the Central Bank of Egypt.
I think
I think that's a fascinating case study.
yeah.
I have never heard in all of the conferences, engagements, consultants, and everyone else ever talk about the Egyptian case study. Third largest economy in Africa. Yeah.
And where do they draw the line? I mean, they basically built the platform and let all the banks play, and they handed this over.
No, they're running it.
They are running it.
Well, it's a utility,
It's a utility.
but they own 54%.
Got it. Okay.
Pay Inc., we're going to own 50%. So
And
see
all the
parallels.
fintechs have equal access. Banks have equal access.
Licensing framework.
Licensing
all of
framework. So it's
that.
very similar to UPI and PIX.
Yeah.
Okay.
Yeah.
So if you take something like UPI, I mean, UPI is actually part of DPI, right?
Yes.
They said, the problem we're solving for here actually isn't payments.
No, it's digitizing.
It's actually digitization of the economy.
Yes.
So I would love to understand, I mean, are you taking this big picture view that says, because it's interesting for me that you started with digital identity and payments. That's exactly where
Yeah.
India started, right? But the end game was open network digital commerce and open credit enablement network. So they said, we are trying to grow the Indian economy to a $10 trillion economy. The way to do that is we've got to give credit to SMEs, and we've got to create frictionless e-commerce. That was this big picture thinking. Is that part of what we are looking at? Because I thought that was a very interesting end game that they have.
Yeah. The India story is I don't know about you, but I'm only second generation South African, right? So still got roots in India. The digitization of that economy started, what, in 2014? 2012, 2014, thereabouts. So it was a very deliberate step as part of an economic trajectory to invest in the digitization of their economy. And they started with Aadhaar. In our case...
Aadhaar was actually 2009.
Yes, absolutely.
Yeah.
So it's Manmohan Singh's time, right?
Yes.
When he was prime minister. So this notion, and I suppose for us, and it comes back to this point you raised earlier about National Treasury and Mzansi account and things, and us staying in our lane. We don't have, as a central bank, as a SARB, the mandate to fix the economy. Our mandate is to protect the value of the currency in the interest of balanced, sustained economic growth, and to carry out all other functions normally carried out by central banks, one of which is be responsible for the national payment system. Yeah. So in doing that, how do we leverage what we're doing here to create a platform that allows for others to play? But at the same time, I don't know whether it's alignment of the stars or whatever it is, but clearly we started this journey 2 years ago. Late last year, the presidency kicked off this program around Digital Mzansi about digitizing government, which is borrowing from the India. But it's about digitizing government services. It's not about an economic plan that says digitizing the economy. But I think these things are starting to fit. So we're never going to be responsible for a national ID system. That's Home Affairs.
Yep.
That's a foundational layer. We can build the functional layer. But so when we're going to build this digital financial ID system, and it's going to be distributed, so we manage risks and all the rest of it. Imagine that you can still use it for health. So each of us will have a digital functional ID that has credentials. Department of Health can load on credentials around my health information that if I go into any public hospital, my credentials, the doctor can pull up my entire medical history. The power of it is amazing. But we're the central bank, so we're going to build digital financial ID to power payments and digitize the economy from a payments point of view. But in doing so, we're creating platforms that others can layer or build on top of do a whole lot of other things.
I always feel, I like that approach. I always feel like the stupidest kid in class whenever I'm in India. And the reason is, I have a South African passport.
Yeah, yeah.
So as a South African passport holder, I don't have UPI,
No.
and I don't have Aadhaar, which means that when I board the plane, everybody else is going through what they call Digi Yatra, which is the digital ID path, but I have to go through this path for the slow kids in class.
Yeah.
Because they've got to look at my passport, and there's a soldier with a machine gun, who's looking at my passport because I don't have this digital ID. 45 Digi Yatra was used 45 million times for 45 million flights this year alone in India. So it's amazing. But you're saying that you don't see the Reserve Bank driving towards an entrepreneurial state. That's not what we want here. Right? You're an enabling state. So how are you going to deal with just this tension? Because we've got this kind of virtuous triangle, right? You've got the Reserve Bank, you've got the legacy banks, the incumbent banks, and you've got the fintechs. Now, we want to get all three of them to work together as kind of a happy team. Now, I sit on the board of one state-owned company, Telkom. I sit on the board of an entity that's going to be listed, but is 50% owned by the state, by the Reserve Bank, which is African Bank. And I can tell you that when I sit from where I sit, where I'm sitting at the nexus between private shareholding and state shareholding, and as an observer, this can be quite fractious. At times we've had to push back to the government and say, yes, you're a shareholder, but you're also our regulator. Now this becomes really quite difficult if you are sitting on the board and you've got your shareholder is also your regulator. Now how are you going to, in the telco space, I often say to the ministers, on the minister side, I say, well, you the regulator, are you talking to me now as the regulator? Or are you talking to me now as a shareholder? I need to understand. And then I can't, for example, disclose certain information because it's a listed company. I can't give, one shareholder superior information that I give to the market. Now, these kinds of tensions are actually quite intense. How do you see that playing out with all these investments that you're making?
I think the African Bank one is quite an instructive one. Interestingly and funnily enough, I am the shareholder representative for the SARB on African Bank. and we have mastered this art of balancing our role as regulator and as a shareholder. Of course, we own 50% of African Bank, not because we're an investor and we want to be in this.
You rescued it.
It was part of a rescue, right?
Yeah,
so we stepped in as a regulator to say there's a systemic risk to the financial system, and we cannot let African Bank fail, and therefore we're going to come in as a shareholder. And in essence, we bullied the banks to come in as shareholders, right?
Yeah, that's true.
So all your competitors own shares
It's
in
a very
African
peculiar
Bank.
situation.
Yeah? But it was a rescue in order to save the stability of the system. And so that's why we're there. So it's not by design.
Sure.
We certainly want to get out as fast as we can. And in the SARB, we take it so seriously. So Fundi and I, Fundi who is the deputy governor responsible for the PA, and she's the CEO of the PA, the Prudential Authority, we both sit at GEC, right? So at the last meeting, I had to present a paper on the IPO process at African Bank and what it means for us and all the rest of it. And Fundi immediately says, "Thank you very much, I'll leave the room." Right? And so I leave, she leaves, and I talk. And then straight after that, she's got an item that talks about, between herself and the financial stability team about what risks they're seeing in the system, and they want to talk about a particular bank. And so I have to leave the room.
Very good.
So we managed this, and we've been very, very, very hard about that. But the reality is that's internally. Externally, people don't see that. So with the Pay Inc. transaction, we had to convince the tribunal, the competition tribunal, that we have very strict corporate walls in order to manage the tension between a regulator and an operator. And we take that very seriously because we've been operator and regulator in the payment space with Samos for the last 27 years.
Fair enough, yeah.
So again, we're using the same kind of thinking.
And do you see this as a long-term play, that this is sustainable for 20 years?
Yeah. So African Bank will get out of
No,
it.
of course, yes.
Right.
I mean, that's due for listing.
On paying, and maybe I should make this point, because people are talking about, our shareholding and the other banks are still there and all the rest. We've been very clear, right? This is a 5-year interim transitional mechanism.
And what do you see happening after 5 years?
Beyond 5 years, well, our starting position has always been, we want to own this 100%.
Oh, you want to own it 100%. Okay.
We want to own it 100% because it must be a public utility. Because again, when I come back to private-public partnerships, commercial interests and public good interest are not good bedfellows. In a time of crisis, they have common objectives. In the long term, their primary objectives will clash, and you'll make suboptimal decisions. And it's for that reason we say, in the long term, we don't believe a public utility should be co-owned with key players in the market. However, we've moderated that thinking. We think the SWIFT model is a very, very interesting model. So what about we still own a share, or maybe not, but actually the ownership is based on volume and value of what you put through the system. And so it's open, so it's beyond just the 5 banks that now own a significant share, or the 8 others, there are a few others that own small percentages. But then say that portion, or even ours, is diluted to say, if your entity puts through X percentage, every 2 years we'll audit, send you a check saying your shares have reduced, and that's how the SWIFT model works, right?
Yeah.
It's like a cooperative.
Yeah, well, MasterCard and Visa used to work like that, didn't they? At one stage, that they were owned by the banks.
Yeah.
Right?
So it's probably those kind of, but we're going to have to explore that in the next 5 years. We've told ourselves in the next 5 years, we have to come up with a long-term structure.
Yeah.
But the current structure is for 5 years only.
But that's important, right? That's important that we are aware that 5 years and then actually we open to new ways of thinking about this. That's really a powerful point. I actually didn't.
So that you can manage the public good
Yes.
and the commercial interests.
Yeah,
Because I think there's in the long term, you're going to drive suboptimal decisions if you stay in bed.
So I think that's right. The challenge you have in the payment industry is that the payment industry burns energy, right? And I don't mean just electricity. It burns energy, it burns cash, it burns bandwidth, it burns resources. And it's either going to burn energy to create heat, or it's going to burn the energy to create light. We want light. Yeah. What we don't want is heat. And right now, there's a lot of friction, and the friction is creating the heat. Yeah. So it feels like what you're trying to do is get the heat out by getting rid of the friction. The problem that we've got is people have learned how to monetize that friction. Yeah. So now you've got a perverse incentive to keep the friction in the system. So how are you going to prioritize looking for this friction and getting this friction out so that the energy goes towards light and not heat?
I suppose it is about continuing to pay close attention to what people are saying, all the parties. Because I think you can't pick winners and losers. I think it's about listening to everyone. And it's your Makimoto curve. Right?
Yes, Makimoto wave,
It's about figuring out where this core base needs to be that we need to get right to minimize the amplitude of these waves.
I like
so
that.
You can smooth it out.
I mean, if you think about it, it really says first we want adoption, then we want monetization. Yeah. Monetization comes after adoption. If you look at WhatsApp, right? WhatsApp killed the post offices. While the post offices were trying to become better post offices, right? WhatsApp came along and said, actually, you don't need a post office. We can send messages this way. And when WhatsApp was bought by Facebook, they had 500 million customers, massive adoption. They had 100 staff. They had zero marketing budget. And their revenue was zero. And they sold themselves for $19 billion. Now they're looking at monetization of WhatsApp. I mean, do you see a similar kind of approach going here where we say, look, monetization will come. Let's build this so that it's frictionless, drive adoption, and then it's up to the players in the industry to monetize this.
And isn't it your thing? I mean, we're all fishing in the same pond. We're depleting the stock
Yeah,
of the fish.
that's true.
And so make the pond bigger. There's 60% of South Africa people, 60% of the people in this country that are not using digital payments, they're using cash.
Yeah.
Grow the pond, and then we can all make. And that's what you've seen in Brazil, right? I mean, initially the big banks' revenues took a dip, but now they're seeing that their customer numbers, their revenues have exceeded where they started, right? And that's because the pie has become bigger, the pond has become bigger.
Yeah, it's true, right? In both Brazil and India, you had this unknown. The Reserve Bank pushed the change. They were fearful of the change. And when the rules change, everybody goes back to zero.
Yeah.
And as you quite rightly say, in Brazil, I think we've got this embracing of it. In India, I mean, I work with a lot of banks in India, and I was actually in Sao Paulo and in India in the same week, last week. And I've seen it in both countries, that the banks are now embracing this fully.
Yeah,
They didn't initially, and they did it because the fintechs said, if you're not going to do it, we're going to do it.
absolutely.
I mean, if you go to India, for example, Paytm and Flipkart, these are the big e-commerce and payment systems, they embraced UPI, and the banks now scrambling to say, well, if they're doing it, we better do it as well. So that's kind of what we want to create, right, is healthy competition.
Healthy competition. And somebody told this to me the other day, it's don't make money from the flow. Make money from the service. Provide banking services. Don't provide payments. Provide services, not banking services. Provide services and differentiate and compete, and let the flow be frictionless. Take the heat out. Make it the light that allows for that competition.
Very good. Now, there's one challenge that I've seen in virtuous triangles like this, where you've got regulator, large incumbents, fintechs, right? This is the triangle. This is your challenge, I guess, for the next 5 years, is we don't have aligned agendas. This is the problem, right? Everyone has a different agenda. Some are playing to win, playing not to lose. People are focused on their profit pools, etc. How are we going to manage this alignment of agendas? That's the first problem. The second problem is alignment of cultures. You look at the culture in a bank. I've worked in a bank for 12 years. I can tell you that's really difficult, right? Decisions get made slowly. There's no risk-taking. Everybody needs to be careful. The systems are complicated. Nobody wants to make a mistake. You get fired for taking a risk. You don't get fired for not taking a risk. So everyone is biased towards not taking a risk. Fintech, on the other hand, they think we're going to fail. We're going to think big, start small, fail cheap, scale fast. Completely different to a bank. So the culture is completely different. Reserve banks coming in and saying, listen, we want the greater good for South Africa and South African society. Now, so you've got a culture like challenge, you've got a delta on culture, you've got a delta on agendas. How are we going to get to consensus? Because this is going to be the big, how do we get people to agree? Or are you going to say we don't need consensus, or are you going to still try to get consensus?
I spent 2 years. I'm not looking for consensus.
You're not looking for consensus.
I'm looking for sufficient mass to move forward.
So sufficient consensus. I think that's
because, I mean, look at this example, right? In South Africa, we've been talking about white label ATMs for 14 years. You can think about every analysis and paper that's ever written on white label ATMs being presented, debated, discussed. Everyone, and actually, if you talk to them individually, everyone tells you white label ATM is the right thing to do. 14 years later, we have not done it. And so, even when you think you have consensus, you don't get action. Well, have 3 papers presented. I'll ask for 3 papers. I'll test it with whether it's happened elsewhere in the world. I'll look at the international models. There's nothing unique about payments in the world, right? We're all similar. Our context might be different.
Okay.
And then we'll make a call and get on with it. And sometimes even if there's no consensus at all, and it's not even sufficient massive consensus to move forward, maybe it's the right thing to do, move forward, and then the world will change, right? Sometimes you need to make bold steps to get the change happen.
Sure.
Without it, it's never going to happen.
Yeah, fortune favors the brave.
but make considered decisions, make deliberate
Yes.
decisions.
So how do we loosen control without losing control?
Yeah.
That's the challenge. Some lovely questions here for you. First question from Ingrid Goodspeed is, when is South Africa getting a CBDC?
Never.
Never. Okay, Ingrid,
Simple.
we'll discuss
We
it.
published a paper 2-3 weeks ago that put out our position as a SARB on retail CBDC. Let me qualify that. Retail CBDC. We're saying there's no business, there's no use case for a retail CBDC. A fast payment system with real-time clearing and settlement addresses the use case.
Yeah.
And that's what we've said. Wholesale CBDC, a different matter.
Sure. I've got a question here from Ms. Wilson. Traditional banks are inhibited by regulation. What is the SARB doing to address this and make the industry an even playing field?
So we're tackling payments. We're not tackling banking.
That's fair enough.
PA deals with banking. There's a reason why banking license, you have to first start off by having 100 million rands deposited with us before you can even start the process of applying for a bank license. You take deposits, you're a bank, you must comply. Payment service providers is a different ballgame. And so what we'll create is a level playing field for payment service providers. There's already a level playing field for banks, the different level of banks, whether it's cooperatives, mutual, or fully fledged banks. There's already a level playing field there. That has been well established, very sophisticated, works really well in this country.
Very good.
What we want to do is create a level playing field for payment service providers.
Okay, fine. Perfect. A flat earth policy, basically, right? The earth is flat because it's level playing field now. A question here from Anita Koch. What support can fintechs and PSPs expect from Pay Inc. and SARB on standardization and adoption and the rollout of PayShap, which is a failing experiment at the moment?
So we are going to standardize. I mean, now that we formally, well, we don't formally, we just got approval. I still have to write the check and do all the necessary share transfers and all the rest of it. But once we've done that, step one would be, what are the low-hanging fruits? How do we bring parity? How do we allow other players in? And how do we standardize the product? And then a roadmap for what the future looks like. So we get a fully fledged fast payment system that can compete with the UPI and the PIPC.
Yeah, absolutely.
Because ours doesn't at the moment.
Yeah, fair enough. I think there's a question here from Ms. Modisa on how will the fintechs, bank and central bank collaborate where the shareholder and the boards is the regulator? But I think you've answered that question already. Another question was from Rob Muller was, to alleviate the friction caused by the regulator also operating the utility, why not have an independent regulation board run by the industry?
Self-regulation has failed us, right? That's what we've had for 30 years. It's why we're stepping in. We've left it to the market to solve for the payments. Hasn't happened. It's why we're stepping in. So I think the self-regulatory model for payments is not working.
Okay.
And so the SARB will play its role as a regulator.
Steve Makucheta asks, how can government create an enabling environment that encourages experimentation and innovation without compromising financial stability?
You have to ask that to government.
You've got to ask that to government.
Yeah. Because the question is for government, right? It's not for me. I can't answer on behalf of government. What we will do is make sure there's financial stability. So when somebody stands up and says, maybe we should combine the assets of Postbank with African Bank, or Postbank must get Postbank must get a banking license. We say, well, you wrote the law, right? We just comply with the law. The law says you must do 1, 2, 3, 4, 5 to get a banking license. You don't get it, you don't get a license, you don't
the criteria are very clear and transparent.
Very clear.
Yeah.
And if you create stability problems in it, we will intervene.
Okay. There's another question here from Anine de Kock is, how would the acquisition of BankServe impact collaboration in the payments industry? Do you see that acquisition helping with collaboration?
Absolutely.
And any particular...
Yeah, so BankServe is no longer going to be just an operator. It's going to be the scheme owner, right? The scheme is going to sit with BankServe. They have to sit and write the rules there. It's not going to happen in PASA. And so you're going to have to put collaborative structures in place that allows for all of the participants to shape those rules. But ultimately, it's about hearing, it's about getting inputs but somebody has to make the call and make the decision.
That's fantastic. Folks, we've run out of time. I think that's one of the most interesting unstructured conversations I've ever had. Thank you very much. Thanks, Philippe.
Thanks.
Mark.
Thanks.
Thank you. Thanks for joining us. Thank you.
Thank you.